and welcome to this Moneycontrol live stream. You're tuned into Closing Bell on Moneycontrol, of course. Turning out to be a yo-yo session, so to say. We did manage to claw back from the day's low after taking out 25,900 on the downside. But we are once again around those 25,900 levels. Down 90 on the Nifty. Half an hour ago we were just about 40 odd points down on the Nifty. We had seen a very, very strong clawback. But once again, some bit of volatility. No surprises given the fact that it's a weekly F&O expiry on the Nifty. So, fair bit of volatility was the order of the day any which ways. But, given the fact that we are outperforming global peers, there's nothing much to really complain about. Because if you look at the texture across Asian markets, bleak to say the least, because the Nikkei slumped over 3%, and even in the European markets, the indices are down well over 1%. If you look at the CAC, DAX, FTSE, all of them down in excess of 1.5% or thereabouts. In the wake of that, we are faring much better. We're just about down 0.3%, 80, 90 odd points on the Nifty. So yes, we have outperformed global peers in that sense. And even if you look at what happened on Wall Street overnight, we saw the Dow tanking over 500 points. Of course, concerns around the AI bubble, and that too ahead of Nvidia earnings that come out tomorrow after market hours. Ahead of that, of course, some bit of selling pressure when it comes to the AI names, technology names in the US. But, if you look at what the other indices are doing, look at the midcap index, it is underperforming. The midcap index is down in excess of 0.5%. The breadth is also firmly in favor of laggards. In fact, portfolios aren't looking all that great today because the advance decline ratio is 2:5. So yes, some bit of pressure there. But sectorally as well, the bank Nifty was toeing with the positive line, but once again it has succumbed to some bit of a pressure. It's down, but mildly so, just about 38 odd points down on the Nifty Bank Index. Sectorally, things aren't looking all that rosy because all the sectors are trading in the red as we speak. Realty, metals, these are some of the top laggards. In fact, the real estate index is down 1.5%. Metals are down 1%, and blame it on the dollar strength because the dollar did firm up yesterday. We have a slew of data that is expected out of the US after the shutdown ended. The longest shutdown in the US history ended last week. So a lot of data expected this week, in terms of jobs market, FOMC minutes also coming out, other earnings also coming out. That will give us a sense of the consumer sentiment and, of course, what's happening on the AI front as well with the numbers from Nvidia slated later this week. But FMCG also in the red. So all the sectors are trading in the red as we speak. And, autos and PSU banks, you can say, are the ones that are seeing the least selling pressure. And in terms of the individual movers, then the list of laggards is longish today. Interglobe Aviation, that started the day on a positive note, but it's back in the red. In fact, it's the top Nifty laggard. Tech Mahindra closed second, Tata Consumer, Jio Financial, Hindalco, Infosys, Cipla, the list goes on and on. Most of the stocks on the Nifty are trading in the red. In terms of gainers, list is fairly slim. Bharti Airtel, that's the top gainer, up 2%. Axis Bank, even Asian Paints, seeing buying interest, numbers are fairly good. A couple of days of selling pressure or profit taking it saw, but back in the green. Maruti Power Grid, Reliance Industries also holding out in the green. In terms of mid caps, well, we'll take stock of the individual movers in a bit, but let's bring on board our guest for this afternoon. Joining me is Ankit Soni, AVP Fundamental Research at Mirae Asset ShareKhan. Ankit, lovely chatting with you this afternoon. Of course, we are seeing a fair bit of volatility, but the fact that we saw a spate of block deals today, after earnings season, once again, a lot of paper hitting the market, over 9,000 crore P worth of block deals, and that too as soon as the earnings season concluded. Will this supply of paper prove to be a dampener for the market, given the fact that we saw a good recovery and we did, clear the 26,000 mark in trade yesterday? But do you think all this supply of paper will cap the upside here on going forward?
Hey, hi. Good afternoon. Thanks for having me here. So on the broader lines of it, there were a lot of issues which has been coming in with respect to the selling of the promoters and etc., which has been going on for around after the immediately after the results, as you clearly mentioned. So that gives a little bit of a red line, but drawing your attention more towards the India growth line story, which is there, and which will be how the industry or growth, particularly markets, will be panning out in H2, will give a more broader idea. And a little bit of losing streak on the continuous 4-day consecutive trading mark. I mean to say profitable marks. There wasn't some sort of a decline which is to be seen in here, but we see a broader set of I mean to say the markets bringing up, and fairly a lot of things has to be fueling it up, like going forward the trade deals issues sorting out, earnings growth is back into the trajectory, and then upcoming season and positive outlook on the managements of the company will be more drawing down the outlook on the market for going forward.
Hmm. All right, but you mentioned earnings. If you just look at the Nifty universe, barring some cyclicals, earnings have been largely flat. What do you make of this? Would you still say that the downgrade cycle is behind us? I'm just talking about the Nifty universe. We'll talk about the broader markets in just a bit, but only with respect to Nifty universe, how is it looking, and what do you expect for the second half of the fiscal?
Yeah, so when we compare to Nifty Universe, actually, so the revenue estimates have been more or less in a single digit growth as such. So broadly seeking out with a view to onto the large caps and the Nifty 50 earnings growth and going forward outlook, we see a broader set of management commentary being picking up with respect to more. Space like consumer sector and other aspects of the sector. In the consumer sector, particularly paints, I believe is more good, have given a good growth outlook as such, and we have sort of like recently upgraded our stock Asian Paints to buy as well, with the growth outlook clearly visible.
Hmm.
And so broadly sets out to be we see a broader set of financial year 26 growing earnings growing to be around 9 to 10% in foreign financial year 26, and we see that those earnings for the H2 will be growing in more of like a higher double digit I mean to say lower double digit numbers as such, or at least the large caps for Nifty 50.
Hmm. Okay. What about the mid caps? Some of them have done extremely well. Which are the pockets that are, an emphatic hit, and which are the ones that were a miss, according to you?
Yeah, so basically, if we more look towards mid and small caps, there were particularly stock specific and a sector specific stocks which has run up, which has given a good performance out there. And if we see more of like sectors such as banking, jewelry, up in the banking sector, apart from Axis Bank, jewelry, gold, OMCs, metals, paints in the consumer business particularly have performed well. On the side of tech, there was it didn't disappoint much, but a broader good inline set of numbers. Auto particularly were dropped by the Tata Motors. Other than that, and consumer sectors has been facing issues due to the GST transition issues. As we see, we know that the demand got postponed due to the date of GST rate changes and etc. But given the other side of view, there was a full throttle demand push up from the date of the GST announcements and to the year on quarter on date. So broadly, a good set of numbers which we are expecting from the consumer durable sector. Other than that, consumer sectors is expected to be
Hmm.
a good
What
pickup,
about
good sector.
the AC stocks? Sure, sure. Within the consumption universe, what about AC? Once the GST changes were announced, in fact, once the PM hinted that there could be changes in terms of the GST slabs, we saw consumer stocks, taking off. And there were hopes that the much evasive recovery, at least in AC stocks, will kick in as a result of the changes. But there's a seasonality factor also at play,
Yes.
and we've had longish monsoons now. Of course, the onset of winter. Would you expect the recovery to get pushed back to FY27 for AC makers? Also, the fact that you have that BEE norm also kicking in early next year. So
Yeah.
how does all that, how do all these factors stack up, and when do you expect recovery to come by for AC makers in particular?
So yes, you are correct. Actually, the AC segment has been dampened by two of the major factors. One is your GST transition, wherein demand delayed, and then the second one was the sector headwinds which were there. I mean to say the weather headwinds which are already there, the early summers and the continued summer. So we see there's a quite pile up of indices into the inventory as of now, which will be sort more cleared by almost like quarter 3 or maybe quarter 4. So we see a good fresh of demand from quarter 4. So if we see also in the trend earlier years also, there's a huge good extended winter, I believe, or rainy. Rains in the summer season, we sort of like have we experienced the next year as a good summer season. So broadly, other than that, the base would also be a little bit lower on that front. So broadly, the recovery would be more seen from quarter 4.
All right, recovery will perhaps come by the fourth quarter for AC makers. But since we're talking about the consumption universe, also want to talk about QSRs. They have been out of favor for months, but we saw jubilant numbers. They were quite enthusing, and of course there is consolidation talks as well within the space. Today as well, we saw good traction in some of the names like Devyani International, etc. Would you say that the worst of same store sales growth and like for like growth is behind for the QSR space, and do you see more buying interest coming by within this space?
So I believe if you look at the space on the QSR, it's more like it's been more a healthy side of downside, which has been seen on the urban areas, and then expansion into the rural areas is on a positive side for the QSR segment. We need to clearly have a proper view onto how the companies are been expanding into the tier 2, tier 3 cities, and how the major rural areas has been picking up on the QSR space. So yeah, I believe the expansion would be more giving out in pace for the QSR segment. So broadly looks positive, but on the urban area side, there's again a streamline. There's an punchline for the healthy food eating things which are there. So that will take a draw line for the stock
Hmm.
or maybe the companies.
Okay, okay, point taken. You also track the defense space, right? We've seen the numbers have been fairly good from the defense names, especially the likes of BEL. But how do you look at this space now? Would you look at smaller private names like Data Patterns that have also handed good earnings? Even IdeaForge recently won an order and the stock took off, although it is still, quite some time away from its, listing price. But would you look at the defense space via these smaller names, or would you say that stick to the PSU names and there is more room for growth going forward, given the kind of orders they are, order books they have right now?
Yeah, so overall on a defense space, we are quite bullish on the defense space. With the recent AUNs of around 1 lakh crore to be sanctioned, there are a lot of orders which are expected on the order in the defense side of the businesses. That would be more also integrated towards smaller players also. Wherein for the drone segment, there would be more Zen Technologies, Paris Defense, etc. Those particular stocks could be looked out on the that segment. And But broadly, we basically have a coverage around BEL and HAL. which is there. We see a good potential upside on the BEL for a target price of around 500, and we sort of like broadly set to remain strict on the large caps because there will be more orders which will be coming. So BEL, out of those almost 1 lakh crore of AUMs, expects around 40-50,000 crores of orders to be bagging in. This would include more QRSM and other orders as well. So there's a huge potential for the particular, I believe, BEL and HL.
All right. Okay. We'll stick to the PSU names, the leaders in the pack. But let's also talk about financials. Banks, of course, the Nifty Bank Index hit a fresh record yesterday. We've also seen a very good stellar run in PSU banking names. Despite the run up, do you see more valuation comfort, and where would you see more valuation comfort? PSU bank side or private bank side? Because PSU bank side, of course, there could be a fresh wave of consolidation. Then there are talks of increasing FIR limits. Margin wise, they have fared better compared to private names. So, which end of the spectrum would you tilt towards? Where do you see more valuation comfort and more room for upside?
So we broadly would be going towards the PSU banks right now with respect to for further set of news on the consolidation, and other than that, there will be more the name growing, the net interest income growing towards BSU banks. Those are more higher than your private banks. So a balanced approach towards both the scope of banks would be more favorable with a lower side of portfolio being more towards private sector, and then a higher skew towards the PSU banks for the likes of names like SBI, Bank of Baroda, and others.
All right, SBI, Bank of Baroda, those are the PSU banks that are looking attractive despite the stellar run up that we have seen. But lastly, Ankit, name top three themes post this earnings season that one should look at, and top three avoids. After the commentary and after the kind of performance they've handed in, which are the favorite sectors and which are the least loved sectors post the earnings season?
Uh, yeah, so I mean to say, what we see on a broader set of terms is like IT, which is there, which is lagging behind for some time right now, and they would be more picking up with with more favoring news of terms getting in, tariffs issues getting in sorted out, and then Fed rate cut. Other than that, all those issues, and on the consumer sector, obviously there has to be a strong recovery in demand, which will be seen in, I believe, quarter three, quarter four. So there could be a good push of growth from that particular sector. And defense always been an most positive pick with respect to the strong order book and other sectors. On the consumer sector, to be more precise, is more paint sector. We should be more looked in because it's more a revival in the demand recovery actually. And on the laggard side, I believe
Okay, and
maybe, sorry, on the laggard side, we'll be more
please go on.
keeping, I mean to
Go
say,
on.
yeah, so it will be like a little bit away from the consumer durable segments like AC segment for a quarter or two, but then even we should be having considerable approach with respect to companies having a lower valuation, and then who's gaining the market share. The companies like LG Electronics and all still looks good on sort of on set of the valuations when compared to the peers, and they also provide you and with respect of diversified product portfolio. So that those could be a different set of view.
Okay, one last question then. Have you looked at the renewable new energy space? Does that catch your attention? Do you expect the next wave of multi-baggers to be from that space?
I believe we still have multi-baggers from the renewable space. So, but then what we see is there are a lot of players entering into this particular space with more of like module manufacturing, everything, and this one every day, every I believe every 15 days some other IPO for the a particular renewable space is coming out and all the other players are expanding capacity, we see there could be a slight of glut for the particular solar moduling and capacity. We see that a few players which are actually backward integrated would be sort of like surviving the space, and later off would be, I believe, a consolidation should happen going forward.
All right, that's the view. Consolidation should happen as we move forward. With that, Ankit, would like to thank you for taking out time and joining in this afternoon. Look forward to more interactions. It was lovely having you on the show this afternoon.
Thank you.
Thank you. Okay, then take a look at the screen, and it's not a pretty picture because now the earlier low of 25,881 has been taken out. In fact, we have fallen below that level as well. I think we have taken out 25,880 on the downside. So it's a triple digit cut once again. And at the low point of the day, again, 25,882 is where we are at. The low is 25,876 for the day. So yes, fair bit of volatility in the last hour of trade, and it is typical on an F&O expiry day. But yes, whatever recovery we had seen around 3 o'clock has kind of fizzled out, and we are below that 25,900 mark once again. Let's see, just about 7 more minutes to go if we can shut shop above that 25,900 level or not. But yes, clearly 26,000, we did reclaim that level, but we couldn't really defend it. So that happens to be a resistance zone for the Nifty any which ways, as was being pointed out by experts. As we wait for our next guest, let's take a check on which are the stocks that are on the laggards list. I think from the broader end of the markets, that's something that we skipped at the start of the show. So let's see what's really happening on the Nifty 500 index. Transformers and rectifiers, 2-3 days of good traction, and then again back in the red. That stock is down 8%. Keynes Technology numbers were fairly good, but shareholder lock-in ended. And because of that, there is a fair bit of pressure, 6% down on a Keynes Tech. You have Reliance Infrastructure, Godavari Power, SKF India, Hunasa as well, down 4% in today's market. Of course, the entire mid-cap end of the markets is under pressure, as is being seen when we look at the breadth of the market. That's in the negative, firmly in the negative. But what's holding out are the likes of Bombay Burma, GMR Airports, Sapphire Foods, Devyani. So all these QSR names are seeing good lip-smacking gains, so to say, in a weakish market. But on that note, let me bring on board now my next guest for today. Joining me is Osho Krishan, Senior Analyst, Technical and Derivative Research at Angel One. Lovely chatting with you, Osho. We've fizzled out back at the low point of the day. Just about 5 minutes to go, and doesn't look like we'll have a good close, so to say. But before I get your market view, any stocks that you would recommend for as a BTST play?
Yes, definitely. Firstly, the calls that one can look for in current market is, first one is PG Electroplast. PGEL is the script ID name. This counter has been hovering in a very strong consolidation zone, and in the last 3 trading session, it has gained decent traction in terms of volume, and it is on the verge of giving a fresh breakout. So one can look for accumulation in PGEL at current levels. 570 should be struck a stop loss, and nearly 600 and 615 is the potential target in the counter. The other one which has given a very strong breakout is Hudco. Hudco has been into a very strong momentum in last 2 trading sessions and has given a very strong breakout also. So I expect the momentum should be continued in the counter. On the higher end, 251 to 254 is the initial target that I'm expecting in the short-term period, or can be seen as a BTST candidate also. And 237 should be kept as a strong stop loss in Hudco.
All right, PGEL and Hudco, 2 BTST recommendations coming in from Osho. Osho, now let's come to the market. We've fallen back below the 25,900 mark. One was expecting that since 26,000 was cleared on a closing basis, we would now move on to the next zone, which is 25,100, which of course happens to be a resistance zone. But we took out 26,000. What does it look like? Do you think it was just expiry-led volatility and some bit of profit taking happening? And would you expect the up move to resume from tomorrow, or would you say that there could be some more profit taking at these levels?
See, I expect that the today's correction has been led by the jitters because of the global cues. Global markets have not been very much positive in the last trading session, and that has some kind of
Hmm.
movement that has given some kind of bearish negative momentum in today's market. But overall, technically, we are still on a positive front. Although today's closing below 25,900 is kind of a make or break in terms of momentum. The trend remains on the positive front. But if it breaches the zone of 25,900 or gives a breakdown below 25,900, then again we might see some kind of plunge towards 25,750 to 700 kind of a zone. So that could be seen again if we see some kind of further continued sell off in our markets. But still, the momentum is on positive front and dip should be argued well for the buyers. On the higher end, again, 26,000 to 26,100 is a very strong resistance level. There has been multiple attempts to give a breakout, but again, we
Hmm.
are not being able to have a sustainable movement beyond 26,000. So that is still a concerning factor. And I expect the time we breach the zone of 26,100 on a decisive manner, then only there will be some new roadmaps or there will be some new leg of rally in the benchmark index. But as of now, I'm expecting that any dip towards 750, 25,750 can be seen, and that should be seen as an opportunity to add long positions in Nifty.
Hmm. All right. Dip towards 25,750 could be an opportunity to add long positions. But we just the Nifty is trying its level best to end above that 25,900 level. It's around the 25,890 mark or so, but just about less than 1 minute to go. It doesn't look like we can shut shop above that level. But yes, 40 seconds to go for the markets to close. Interglobe Aviation, this stock has been under pressure ever since it reported numbers. In the morning it opened with a green tick, but back in the red and top Nifty laggard. Any thoughts on Interglobe? How are you trading into this one?
See, overall, it was into a positive terrain, but with today's development, again, the counter has again been slipped into a consolidation phase. So on the lower end, again, it is having a very strong support of 5,700, followed by 5,640 kind of a zone. So that has been historical cushion the counter on the lower end. So I expect that even if there will be a continued sell-off in tomorrow's trading session, then again, one can look for buying opportunity around the zone of 5650, 5640 odd levels, and from there onwards there can be a gradual up move in the counter. But overall, until it breaches the zone of 5,900 on a decisive manner, till that time it might be into a continued consolidation phase, and one should look to buy the dips and try to lighten positions at the highs of 5,900.
Hmm. All right, that's the strategy one should look at when it comes to Interglobe. But we've ended below that level that you mentioned, 25,900, 25,892 is where we've shut shop for the day. But still, I mean, one would argue that we are still much better in comparison to what's transpired when it comes to global markets, right? The Nikkei was down in excess of 3%. Korea, I last week also saw a very, very sharp downtick. It came off after that. I mean, kind of recovered. But today, of course, all the global markets were down. Even European markets were down, amid fears over AI bubble, and last night we had Dow tumbling over 550 points. So in that sense, we've fared much better. The only hiccup is the fact that we have shut shop below that crucial level of 25,900. But of course, it was a weekly F&O expiry on the Nifty as well, so a fair bit of volatility can be attributed to that, especially in the last hour of trade. But we did towards the mid or second half, we did see stocks claw back a fairly well from the day's low. In terms of the broader end of the markets, of course, the Nifty midcap index hit a fresh high yesterday, but today it's down somewhere around 0.6%. The breadth is looking poor. It's 2:5. That's the NSE advance decline ratio. That's where we ended. 855 advances to 2080 declines on the NSE. So breadth not looking all that great, and of course portfolios also not in the red, so to say, for the day. In terms of sectors, as we mentioned, all of them were in the red, but the top laggard was real estate. That sector or that index was down 2%. IT down over 1%. IT stocks, of course, will be in focus given the fact that Nvidia reports numbers tomorrow. Of course, we'll be reacting to it only on Thursday morning, but nevertheless, IT in focus. Metals, of course, the dollar strengthening, playing spoil sport for metals. That index was down 1%. Pharma down 0.6%. FMCG, auto, all of them in the red. And if you talk about the laggards list, it was a long one. Barring Interglobe Aviation, that's the top Nifty laggard. You had Tech Mahindra, Tata Consumer, Bajaj Twains, Infosys, Cipla, Wipro, Hindalco, Eternal also in the red after staging a good rebound. HDFC Life, M&M. So a lot of names that were on the losing side, but on the gaining side, you still had Bharti Airtel. That was the top one. Asian Paints, Maruti, Titan, Power Grid, Reliance Industries also holding out in the green. But let's talk about Keynes Tech. This stock was down somewhere around 5% or so. It saw margin improvement in the second quarter, and the company also said that it aims to sustain EBITDA levels at current levels. But of course, the shares dropped as the shareholder lock-in period expired. 5% down on a Keynes Tech. How are you looking at this stock? Is it an opportunity to buy, or how would you trade into it?
Overall, the counter has seen a correction after a very long period of time. There has been consecutive and primarily uptrend in the counter from the levels of 4,000 till 7,500 without having a much of breather in between. But this kind of correction has taken place after a very long period of time, and even the correction consisting around the highs of previous highs of nearly in the month of January 2025. So both the coincidence at the same levels of highs might see some kind of correction in the coming period. Although looking at the recent development in the counter, I expect that on the lower end, it might plunge towards the zone of 56 to 5,500. And then one can look for adding positions in Keynes Technology. So I expect it should continue. The correction should continue for another 200 to 300 points of in the near period, and then one can definitely look to add positions from medium to long term point of
view. Okay, that's about Keynes Tech. There's another stock that I want to discuss, and that's Voltas. Numbers were unenthusing for all the AC makers, so to say. But the stock, of course, on a year-to-date basis is down 25%. Did see some recovery. If you look at the 6-month charts, of course, you would see a green take 9-10% kind of gains, and that was also in anticipation and in anticipation of all the optimism following the GST cut as well. But numbers haven't been all that great, although we had a report from Voltas today wherein they have a hold call and the target price is at 1420 or thereabouts. They've mentioned that seasonal disruptions, GST disruptions, etc. hurt Q2 and management does expect demand recovery in the second half. Purely from a chart perspective, in the last 5 sessions, we've seen a good 5% move. But is it poised for more upside, or would you say that these bouts of upticks are just about something that would fizzle out going forward? What are the charts saying? Because fundamentally, a lot of experts we spoke to are saying that recovery would kick in only after the fourth quarter and perhaps into the next fiscal. So chartically, what's changed?
See, historically, the counter had seen such kind of correction where it has slipped below the 200-day simple moving average, and again have seen a very strong consolidation or base formation for itself before gaining or before adding much more momentum in the long run. So overall, I'm expecting the same kind of structure is presenting as of now. So it is into a very strong consolidation zone where it is having a gradual up movement. There is no significant momentum in the counter as such. But in the recent period, the counter has surged above the 200-day simple moving average. So looking at the historical trends, now the counter tends to have a kind of a bullish approach. And from here onwards, one can expect a decent upward rally in Voltas. But in the short-term period, I expect the resistance, which is placed around the zone of 1440 to 1450, that will be very crucial to watch for in the short-term period. Any breakout above 1450 can only provide strong momentum in the medium term point of view. So I expect from here onwards, if someone is having a medium to long term kind of an approach, then definitely can start adding positions in Voltas at current levels. For short term point of view, I expect 1450 to 1440 is the immediate resistance, and a breakout can only provide strong momentum in the coming period.
Okay, that's about Voltas. But another stock, that's gaining momentum is GMR Airports that hit a fresh 52-week high today. We've had a brokerage report also wherein they have raised their target price. But the stock, if you look at the returns in the last 6 months, it's up 19%. Last 1 month as well has seen double-digit returns. Since September, early September, the stock is up in excess of 20%. Of course, hit 52-week highs as well. Would you advise chasing momentum here?
Yes, definitely. I will advise to have a kind of a bullish approach in the counter because after a very strong period of consolidation or corrective phase, the counter has been into a positive traction. And this there has been a strong momentum also because the zone of 100 has presented a strong hurdle in the short-term period. But looking at the momentum, especially today, where it has surged nearly 6.5% and has breached the crucial hurdle of 100, I expect the momentum is should maintain on the higher end, although some kind of cool off should not be negated because there is some possibility of profit booking at higher levels. But now the range has shifted on the higher end. So I'm expecting 98 is a kind of a very strong support level for the counter. And on the higher end, 118 to 120 kind of a zone can be seen as the next potential target from short to medium term point of view. So I expect from here onwards another 16 to 15 points of rally is still there in the counter, and one can look for buying opportunity at current levels also.
Okay, one can look at buying opportunity at current levels also for GMR Airports and expect another 15 to 16 point kind of a rally from here on. Couple of more stocks then. Eternal, it has had its, up days as well, but the last 1 month it has been in the throes of profit taking. Today there was a report from Morgan Stanley wherein they've said that in stress case the stock could bottom out at somewhere around 280 to 285. It's holding on to the 300 level. Is it a good buying opportunity, and would you concur with this view that 280 could be a floor when it comes to Eternal?
See, technically, the counter has seen a kind of 18% of correction from the peak. And looking at the historical trend, the counter is now hovering around the neckline of breakout, which is approximately around the zone of 300. So I expect that from here onwards, the counter can see some kind of consolidation. It even coincides with the 100 exponential moving average. So I'm expecting that in the coming period, the counter can see some kind of consolidation or base formation for itself, and then from there then onwards we can expect some kind of turnaround in the momentum. So overall at current levels the risk reward seems very much favorable for the bulls, and one can look for buying opportunity even at current levels but in a staggered manner, and on the higher end 335 is the target that I'm expecting from short to medium term point of view.
All right, 335 short to medium term target on the shares of Eternal. Last question really on Bombay Burma. Second straight day of gains, after 4 days of losses. Volumes were, of course, the highest in a month. The stock, although on a monthly basis, has given negative returns. How would you look at this this rally, this fresh leg of rally, and would you advise taking a look at the stock?
Looking at the volume in the recent 4 or 5 trading weeks, yes, there is a kind of a sign of reversal in the counter. So one can look for opportunity. Although I will be very much strong, decisive, my view will turn very decisively bullish once the counter crosses the zone of 2100. So 2100 being a very strong resistance level, one should wait for those levels to break out. If it happens, then from there onwards, on immediate basis, 250 to 300 point of rally can be expected, and also there can be a turnaround in the counter also. But looking at the recent volume build up in the counter, I'm expecting that it has formed a base for itself and is on a verge of giving a fresh breakout.
Okay, on the verge of giving a fresh breakout. That's Bombay Burma for you. But with that, Osho would like to thank you for taking out time and joining in this afternoon. Always a pleasure. I look forward to more chart checks in the coming days as well.
Thank you so much.
Well, thank you. Well, on that note, of course, markets ended below that 25,900 level. That, of course, Osho was mentioning was a crucial level. Here on going forward, could look at buying on dips until 25,750. That was the view from Osho. But 26,000, 26,100 major resistance levels for Nifty, and of course we couldn't really defend that 26,000 mark for a second day on the trot. Yesterday we did clear it on a closing basis, but no such luck today. But on that note, let me bring on board my colleague Yatin Mota. Yatin, one was hoping that we would slightly toe that green line and perhaps end around the 25,900 or even 26, given the fact that we were down only 30, 40 points after 3 o'clock. That didn't happen. I think it's expiry day volatility that was at play.
Not only that, we had the global cues which were quite bad. In fact, Nikkei was down 2%, Europe is down anywhere between 1 to 2%. So I think we are taking cues from the global markets which are under pressure. And it's not only the global markets, I think the global data also has been quite weak. In fact, if you look at Japan, US, no spell of good news coming in from those markets. So I think globally, things are looking weak, and probably the FI selling coupled with a lot of block deals which add to the supply in the Indian markets, and probably the reason why we ended almost near the day's low, almost 120 points lower on the Nifty at close.
That's true, Yatin, but there's no taking away from the excitement that some of these new listings and recent listings are witnessing. Grow saw another 6% kind of a jump. Market cap now above 1.1 lakh crore, if I am correct. But Physics Wala, what a stellar debut it was, 33% listing, and I think it was up somewhere around 44% last time I checked. So it must have ended higher by that as well. But just want to point out that the management was on CNBC today, and he mentioned that in less than 12 months they will turn profitable.
Correct.
And of course they want to capture South India market as well, and revenue guidance of 30% for next few years. And of course, they were, when I had a chat with the management as well, he also mentioned that in terms of pricing strategy, nothing will change. Their core philosophy is to, penetrate as much as possible in terms of bringing education at a cheaper price to as many people as they can. And the price point will also not change. It will only adjust for inflation, somewhere around 6 to 7% or thereabouts. So that core philosophy will not change, and profitability, of course, will come in due time. And of course, today they mentioned that less than 12 months they will turn profitable. So yes, street fairly upbeat on that note, and of course we've seen good gains coming in on the first day of Physics Wala on the last street. But talk about some of the other movers, Yatin, mid-cap universe.
So, far and away, we had GMR Airports. I'll talk about the stock in detail, was up 6%. Graphite, Devyani, Sapphire, all of these stocks moving in trade. What was not doing well is Keynes Technologies. Post the block deal, the stock ended lower by nearly 6%. IGIL, we had Reliance Infra, SKF India, all of these stocks are lower by 4 to 5%. Paytm also post the block deal was down nearly 3% in trade, and so was the pressure in several other stocks. But talking about Chennai Petro, Federal Bank, Bharti Airtel, Canfin Homes, all of these stocks are now at 52-week highs.
All right, those were some of the movers and shakers from the broader end of the markets. Of course, advanced decline ratio not all that great, 2:5. That was the NSE advanced decline ratio. Portfolio is not looking all that great this Tuesday. But let's talk about some of the sectors and stocks that are on our radar this afternoon. Metals were among the top laggards today, Yatin, although realty was down 2%. Metal index was down in excess of 1%, and you can blame it on the dollar strength as well, ahead of all the data that's expected out of the US. Dollar formed up overnight, and which is why I think metals were losing some shine today. But metals as a universe has done well in terms of earnings. But going forward, there are some concerns, in terms of fundamentals, and Axis Securities seems to be a little cautious on the near-term fundamentals as when it comes to steel sector. In fact, they expect steel spreads to remain muted in the third quarter. They've said that steel spreads on a consumption basis are likely to fall 7% quarter on quarter in the third quarter if the spot HRC prices do not inch up. Now, HRC prices are already down somewhere around 4% on a quarter on quarter basis, but what's keeping margin under pressure is the cost side. Coking coal has inched up. Companies typically consume this with a 1 quarter lag. So the full effect will now come into effect only in the third quarter. It will now only show up in the third quarter. In fact, Indian HRC is now trading at a 12% discount to landed Chinese imports, and that's telling you that supply is too high in India. Production is up 12% on a year-on-year basis, but demand is up only 8%. And exports also remain weak, and India exported just about 4.9 million tons last year, vis-a-vis 7.5 million tons. And we've actually turned net importers this year. Chinese, exports remain elevated globally, keeping prices in check. So takeaway is oversupply at home, cheap Chinese cargoes, and weak export markets, and which is why pricing pressure continues, and they are a little. That's why they are a little cautious when it comes to steel fundamentals. In terms of aluminium, the outlook is a bit brighter because the picture is a little more balanced. Prices on the LME were up 7% on a quarter-on-quarter, and that's thanks to strong demand from the packaging and electrical sectors, and of course a softer dollar as well. Globally, of course, supply is tight. China is close to its capacity cap, and outside China, restarts are a little slow. For calendar year 2025, the global aluminium market is expected to remain in a slight deficit, and that could support prices going forward. Within the metal space, Axis Securities has pointed out APL Apollo as the top pick within the steel space, and Hindalco within the aluminium space. Now, for APL Apollo, it has a target price of 1950 and a buy recommendation. The rationale here is that the volumes were at record levels despite weak macros and extended monsoons. In fact, capacity utilization was also strong at 2 of its units in Raipur and Dubai plants. In fact, management has also said that it sees double-digit volume CAGR for the next 3 to 4 years, which is why I think Axis Securities is upbeat on APL Apollo from the steel pack. But Hindalco, they still have a buy call. Of course, we saw a lot of pressure coming in because of Novelis and a cost jack up at Bay Minette project. But India business did well, and because of that, they are fairly upbeat on Hindalco. They have a target price of 880 rupees, and they believe that India operations will offset Novelis's muted profitability. In fact, additional capex plans that will come into play later on, that's also a positive that they had pointed out. And even with respect to Bay Minette, they have said that the management is confident that despite the increase in costs, returns will be better than that of the cost of capital. So these are some of the factors that Axis Securities has mentioned, and these are the 2 stocks that they are bullish on within the entire metal universe.
And metal is really looking soft after the good rally that we saw recently with the metal index hitting record levels. But what is also hitting fresh 52-week highs is GMR Airports. Now, Jefferies today came out with a note in which they have increased the target price for GMR Airports to a level of 115. This was earlier 108. And today the stock was almost one of the top F&O gainers with 7% intraday gains coming in. They have raised the EBITDA estimates by 5 to 7%, and obviously the aero business, which is the core business, is expected to do well, especially after the Delhi, Terminal 1 expansion. But the non-aero revenues are also something which Jefferies believes should drive the bottom line or the profits for GMR Airports, especially in the second half. We could see some pickup in the passenger movement, especially after the upgradation of the Delhi Airport T1. Also, the blended aero yield per passenger has seen a 69% growth and 18% sequential growth, and the non-aero yield is now higher by nearly 17% year on year according to Jefferies. And now moving ahead, the company targets better growth in the non-aero business, which will be also the margin profit driver. So, all in all, good show by GMR Infra, which is GMR Airports now, and Jefferies turning bullish on the counter with a target of 115, as I mentioned earlier.
That's correct. And even technically, I was just talking to Osho Krishan of Angel One about this, and he said that he expects another 10-15 rupee kind of move from here. And even at current levels, the stock remains a good buy. That's, of course, according to Osho Krishan. But another stock that was in focus today was WeWork India, listed back in October, and it had a tepid listing. But today the stock was upbeat, given the fact that it has had an initiation call by Jefferies. They have a buy call. Target price is at 790, which implies a 29% upside from yesterday's close price. Now, they are fairly bullish on the flexi workspace. In fact, they've mentioned that India's flexi workspace market is entering a high growth phase, and WeWork India is positioned to firmly be at the forefront of this, of this growth phase. In fact, they've said that WeWork India is the largest flexible workspace operator in the country by revenues. They do expect the company to ride the sector's rapid expansion over the next few years. In fact, they've mentioned that the flexible workspace has been growing at a robust 17% compounded annual growth rate, and that's twice the growth rate of traditional office stock. And this highlights the structural shift towards, hybrid and flexible work solutions, office solutions rather. Adoption in major metros has already been significant, but there is room for deeper penetration going forward, according to Jefferies. They've also highlighted that evolving corporate preferences, cost optimization needs, and the rise of distributed teams. These are some of the factors that is contributing to the massive growth that the flexi workspace is witnessing. And of course, WeWork India's premium positioning continues to be a key differentiator. They are focused on superior design, technology-enabled operations, and enterprise-grade services. And all these have helped WeWork, command higher average revenue per member, and that's why they command better margins versus its rivals as well. And of course, WeWork is expected to deliver healthy financial, performance going forward over the medium term. In their last second quarter earnings report as well, they reported a profitability of 6.4 crore rupees and solid revenue growth as well. So Jefferies is now expecting the company to clock 22% and 28% IGAP revenue and EBITDA CAGR over FY25 to FY28. So although had a tepid listing, but brokerage initiations, they kind of tend to instill confidence in investors to go out and look at the stock, and which is why I think WeWork was quite upbeat in today's session.
Yes, and I think a lot of listings recently have happened in the co-working space, and WeWork being one of the top brands in the entire space. I think in Mumbai they have a very huge setup in BKC, but bulk of their revenues come in from the Hyderabad and Bangalore markets. And obviously Pune.
Yeah, that's true. Well, that was about all the stocks that we had on our radar this afternoon. Of course, we ended on the back foot, but let's see how things pan out, because even though global markets saw deep losses, we weren't all that affected. Yes, we did end below the 25,900 mark, but we still managed to outperform most of the global markets. So let's see if we focus more internally and on the good commentary that's coming out around India-US trade deal. Who knows, we may overlook the kind of developments that's taking place across global markets. But tomorrow NVIDIA reports numbers, Yatin, that will be in focus as well, but that will be after market hours, so we'll react only on Thursday. Yeah. Any which ways, thanks a lot for tuning in. Have a great evening and come back and join in tomorrow once again with the markets at 9 a.m. from Yatin and me. Have a good evening and we'll see you tomorrow. Thank you.